All right, so I want to go over the news and talk about a couple things from this past week. First things first, if you get value out of the video, please like and subscribe. Really appreciate that. So the big news, basically to end the week, was the jobs report. The jobs report came out stronger than expected. I think it was 256,000 was the non-farm payrolls report, and I think they expected like 130. So quite a bit better than expected, or higher than expected. The unemployment rate fell, earnings rose. So this is good for the average person, but as far as stocks go, at least in the near term, this is not good. And the reason for that is it just lowers the chances of rate cuts. And this kind of piggybacks off what I said in my 2025 preview, that the likelihood of the 4, 5, 6 rate cuts is probably not realistic. We're probably looking at more like a couple, and maybe 50, 75 basis points. But for all we know, we don't see any rate cuts, and it really depends on how the economy is doing, right? I mean, if the unemployment rate starts to go up, then we're probably going to see some cuts. But there's a lot that's still up in the air. I still think that there's going to be some positivity coming with the new administration, regardless of what you think of them. I think that there's going into it, I think that there's definitely uncertainty, which I think is part of the reason why the markets are a little bit down recently. But the uncertainty is gone once they're in office. You know what they're going to do once they're in office. So I think that there'll be some optimism there. And I still do expect a volatile year. It's just overwhelmingly likely. It's not a guarantee by any means, but it is likely we see some excess volatility this year, given how well the last couple of years have been. So as far as stocks go, this was a pretty negative week for stocks. Basically, all of the indices were down quite significantly. Nothing crazy, but if you look at the S&P, the SPY was down just under 3%. If we look at the NASDAQ, I believe it was down about 3.5%. The QQQs. Yeah, NASDAQ 3.6%, give or take. The Meg 7 was, I believe, roughly the same. Which again, the Meg 7 usually leads the market, so that's almost exactly the same as the NASDAQ there. If we look at the mid caps, I think mid caps did a little bit better. They were still down on the week. Mid caps, about 2.3, so they did a little bit better, but they're still down quite a bit. Small caps, I think, were down roughly the same as the S&P, just off the top of my head. 3.2, so a little bit worse. And then if we look at the equal weight index, I think did a little bit better. Yeah, the equal weight index did do a little bit better. So typically that's what you do see, is that when there is volatility, the equal weight index is going to be less weighted towards the growthier names, and those are the names that lead the market on the way up and on the way down. So when you see a down week, they're going to do better, but on an up week, chances are they're going to do worse. Now, is that sustainable long term? That's anybody's guess. But I still think that small caps and mid caps are the place to be. I think even the smaller side of the large cap area. Personally, the area that I'm avoiding the most, and I've said this a lot recently, is the growthier side of the large cap market, because that's the area that's the most overvalued, and in a market that's already expensive, that's the area that is the most risky. The chances of getting excess returns from a market that's already this extended is pretty low. It could happen. For all we know, we're up 20-30% again this year, but chances are, it is unlikely at the end of the day. So my prediction, near term, I still see a lot of volatility. I think we'll see a nice little uptrend, over the next 6 months or so. And then spring, summer, I think we see maybe a 10-20% pullback, and then we close the year within 10% up or down. I still think it's going to be a modest up year. We are down a little bit so far, but I still do think it's going to be a very modest up year. Just my prediction. I could be wrong, obviously. Getting into some other news here from Joseph Wang. While they're on the same page as Powell, noting that most of the prices in core PCE are increasing at less than 2%. The segments that are not are imputed prices, which are perceived to be less indicative. The inflation problem is mostly over. So this points towards we're probably more likely to see rate cuts, which is why I'm not overly concerned. For the simple reason being that if inflation inflation is one of the reasons why the market is hesitant on whether or not there's going to be rate cuts, because it doesn't make sense to cut rates when inflation is high, because that could spur more inflation. So it really comes down a lot of times to the unemployment rate, the jobs numbers, and inflation. That's what it comes down to. If those, if we have, a growing, the jobs numbers are growing, but inflation's under control, we're probably still going to see rate cuts. It's probably going to be really slow and really drawn out, but we probably will see rates go down. Rates are going up recently because the market is spooked at the fact that the economy is doing better than expected, basically. And inflation is still high, above the 2% target, but it is trending down. At least this information is indicating that. The next thing I wanted to bring up here is from Documenting Sailor on Twitter, who's a very good follow. Michael Saylor says there's no limit to how much Bitcoin Microstrategy will buy. And I've said it time and time again, and I still stand by it, even though MicroStrategy is down over the last couple months or so, that I think that they're going to be one of the largest. They might even be the largest company. That might be a little bit going on in a stretch, but I think they'll be one of the largest 10 to 20 companies in the world within the next decade, maybe 2 decades. And the reason for that is that unless we see a big player start to buy Bitcoin very soon, it's unlikely that anyone will ever catch up to MicroStrategy, right? I mean, when Bitcoin goes to $1 million, which again, obviously there's no guarantee, I'm just fairly confident that it will, and you need to buy 1 million Bitcoin to get past MicroStrategy, that's $1 trillion. I mean, there's no company that has $1 trillion laying around. I mean, I think Berkshire Hathaway has maybe 250 billion or so. So, and what are the odds that a company like that puts 100%? Like, it's pretty low. So, unless it starts to happen within the next cycle or so, and even if even if an Apple or Nvidia starts to do it, whether it's even Berkshire Hathaway, even if they do, it's overwhelmingly likely that it's going to be like, hey, we're going to put 5, 10, maybe 20% of our cash into Bitcoin. That's 10, 20, maybe $50 billion. That's a lot of money, but that's still not, or a lot of Bitcoin, but it's still not anywhere near what MicroStrategy has and will have. So that's something to keep in mind, that when Bitcoin becomes as valuable as I think it's going to be, it's overwhelmingly unlikely that another company will, even another country for that matter, it's going to be hard, unless a country starts stacking soon, which is likely. But is it a country that's big enough that can get over 1 million Bitcoin? Because there's not many that'll be able to get over 500,000, even where we stand right now, let alone when it's 1 million, 5 million a coin. So that's a big question. But basically, my point is that it's unlikely that another company will have more Bitcoin than MicroStrategy has. And when Bitcoin continues to go up 20, 30% per year, MicroStrategy is going to go up that much or even a little bit more. And compound, a company that has I think about like a 70, 80 billion dollar market cap, compound that over 20 years, that means they're doubling their value every 3 years, give or take. That means that after 3 years, let's say they're 150. After another 3, they're 300. After another 3, they're 600. That's 9 years. After 12 years, they're 1.2 trillion. After 15 years, they're 2.4. After 18, they're 4.8, and after 21, they're 9 trillion, 9.5, 10 trillion. So they're pushing a $10 trillion company if Bitcoin continues going up at the rate it has after 21 years. In 20 years, there probably will be a $10 trillion company, but not many. So I'm fairly confident that MicroStrategy will be one of the largest companies in the world one day. They already are in the NASDAQ 100. They're in some other indexes like your Russell 1000, Russell 3000 obviously, and eventually they'll get into the S&P 500. And once they're a top 10 company in the NASDAQ, that's just going to be massive amounts of inflows. And what happens when there's these Bitcoin ETF, not only the ETFs that already exist, but the ETFs that exist entirely to hold companies that own Bitcoin. Those ETFs are going to get huge as well. They haven't even came out yet. They'll be out within the next year probably. But what happens when those ETFs come out and those ETFs start to have, $100 billion market caps? That's going to mean even more money. So obviously I could be wrong about all of this. We could see a 90% correction in Bitcoin, some black swan event, and MicroStrategy goes bankrupt or something bad happens. That could happen. Or the more likely scenario would be like a accounting scandal or something like that. That's the more likely scenario. But the most likely scenario is Bitcoin continues to go up, and thus MicroStrategy continues to go up, double, triple with the markets going up. And eventually more and more people are going to catch on to that, and that's just going to be this cascading effect that's going to just absolutely dominate the market. So I love what Michael Saylor's doing. He's going to go down as he already is an absolute genius, but 50 years from now, maybe even 20 years from now, he'll be thought of in the same realms as your Warren Buffetts, the Ray Dalios of the world. He's going to be in that group. In my mind, he already is, but in that'll be the mainstream thing. And then the last story I wanted to talk about here is EQ Bank renews share buyback plan. So one thing I've said for a long time is EQ Bank should be buying back shares, and it looks like they're going to start doing that. They plan on buying back 8.4% of their shares. 8.4% of their shares. Again, I don't have ad blocker here, so it's going to keep kicking me out of here. But this is for 2025. So they're going to be buying back a good amount of shares, and like I've mentioned quite a few times, is that they do have. I think they have a double-digit earnings yield, which means they're only paying like a 1.5% dividend. I think where we stand, it's 1.83. So. But they have a 9.5% earnings yield, so they have tons and tons of room to still be buying back shares and still have room to grow the business. So I really like what they're doing there. This is still one of my favorite Canadian companies, still one of my favorite 20 companies overall. So like I said, I really like what they're doing, and they've been up quite a bit over the last week or two, and I think that's part of the reason. So I really like them. If we look at their valuations, I don't even think they're all that expensive. They're above their historical averages, but a PE of 10.5 I still don't think is expensive. I think they should have a PE of probably around 12. So I still think they're probably 5 to 10% undervalued where they're currently at. I do have a full position in every account that I have, so I'm not buying right now. But in the future, when my overall position for them goes down, because I am buying other companies and ETFs, if their valuation was still where it's at right now, I still would be buying. So anyway, that's what I wanted to bring up today. If you liked the video, please like, subscribe, comment, all that good stuff, and stay tuned for more.